Thank you so much for attending our FISRA Exchange event. This is our first live and in-person event. Last year, we held one virtually. And thank you for those who are attending in person. Thank you for those who are also attending online. My name is Houston Loke. I'm Executive Vice President of Market Conduct at the Financial Services Regulatory Authority of Ontario. This was my 4-year anniversary with FISRA. So thank you. Part of my time here, I was with the Ontario Securities Commission. I've also been an advisor to the Canada Mortgage and Housing Corporation. And before that, I was president of the credit rating agency, DBRS. We're in interesting times right now. If you look at, it's never been a more complicated time, I think, to be a homeowner. You've got a vacant home, both vacant homes tax. There's a first-time home buyer's credit. There is a ban, from certain from foreigners buying certain types of properties, and on top of that, you have all the things that are grabbing the headlines. You've got inflation. You've got higher interest rates. When people get mortgages, they are entering into a contract that binds them for the foreseeable future, 25, 30 years. They are entering into probably the largest obligation that they will ever enter into over their life. And that's why mortgage brokering is just so important. And I think it's something that is a critical portion of FISRA's regulatory activities. I'd like to hand things over to Antoinette Leung, who will be our moderator for this session. Antoinette.
I'm Antoinette Leung. I'm head of financial institutions and mortgage brokering conduct at FISRA. I will like to take a few minutes to introduce our panelists. Very grateful for all of them to be joining us today. So on my furthest right is Holly Noble. She is the founding member of CAMLA, the Canadian Alternative Mortgage Lending Association. Got it right. And she is also Senior Vice President, Broker Relations and Principal Broker for Fisgard Asset Management Corporation. And next to Holly is Sadiq. Sadiq is the President of Canadian Mortgage Brokers Association, CMBA, both Ontario chapter as well as national. He is also the Principal Broker and owner of Approved Financial Services. And last but not least, Veronica Love. She is the chair of Mortgage Professionals Canada, and she is also Senior VP Corporate Development at the Mortgage Group. So thank you everyone for joining us today. Just before I jump right into questions, we have quite a few questions and discussion that we want to take the panel through. Just some housekeeping point for everyone. At the end of our session, about 10 minutes, there will be time for questions for the panel. And what we will do is if you like to submit a question, you can either send it online or you can scan the code on your program. That's when you can submit a question. For those in person, we will also have mic where you can add a question at the end. Okay, so I guess the first question that we have is about the current environment. In this environment, we have rising rates. Some parts of the real estate market is softening. And one of the questions I have for our panelists, maybe Sadiq will start with you, is what are the concerning trends you're seeing? And what does it mean for the brokering channel?
Thanks so much, Antoinette. And that's actually, I think it's a question really much on the top of everyone's mind, consumers and the industry as a whole. Obviously, we know homeowner affordability has been impacted significantly, which is leading homeowners to seek financing, typically at higher rates in order to be able to qualify. And this affects their cash flow without a doubt. Both the market and policymakers have kind of forced the industry to pivot very hard from helping home buyers become homeowners to helping homeowners keep their homes. And the big challenge, I think, right now that we're going to face in the industry is with these declining property values, as professionals to be able to advise our clients and find solutions for them to increase their cash flow, manage their debt so that they can weather the storm till the markets settle and hopefully get better.
Thank you for that. Now, Holly, as a lender in the market, what's your view on that?
I think there's two things I could bring up. So of course, there's the home buying process where there's certainly a lot of confusion, some uncertainty. You know, is the rate going to be the rate when I find the house that I want to buy? Is the value going to be there? Certainly a misalignment possibly of their expectations going into the process, as opposed to just, yep, I'm going to purchase this house. This is what my rate's going to be. This is what my payment's going to be. What they may start out with at the beginning of the journey could be quite different a few months later by the time they close and go through the mortgage approval process. But from an alternative, kind of a non-bank lender perspective, there's also the second half of that that's concerning is on renewal, or generally short-term lenders. So what happens in a year? This is a very different environment for our borrowing clients from a year ago today. Sometimes the rates almost double, and in good rates. So will they be renewed? Can they afford the renewal rate? So there's a certain amount of uncertainty, a lot of stress. But honestly, this is where the mortgage professionals and mortgage broker community will truly shine, because they have access to other products and they have education, they have professionalism, which I think is a very good thing.
Thank you for that. So it's interesting you talked about, consumers. There's more uncertainty. They probably have a lot more questions, a lot more expectations from the advisors like brokers. And there are choices, but the choices could be different now because of the bank lending may be different. So in this type of environment, Veronica, I'll ask you this question. What areas of the sector you think require the most focus and most active oversight?
Well, you just led into it. We're the best solution for Canadian consumers, especially right now, because thanks to the government and so many rule changes, it is now so confusing to get into the mortgage space. They can rest assured and feel secure that mortgage brokers pivot very quickly. With every rule change, we, especially leading from the association perspectives, lead the ongoing education as well. And you can see by the representation here today and by those online, we take it very seriously. We're constantly going through ongoing training and development, as are the lenders and suppliers as well. It's not easy to mitigate fast rule changes to our space because there are big ramifications on the back-end software and the systems that process mortgages effectively and efficiently for Canadian consumers. But rest assured, this industry adapts well, and consumers are going to lean on us more and more and more. And the numbers, I'll talk about that later probably, but the numbers are proving that Canadians are valuing the support that mortgage brokers and agents give now more than ever. We'll take you through the complications. We'll give you way more options than you've had in the past, and you'll be rest assured that we'll find the right mortgage product for your needs.
That's great. So this is actually a good lead into our next topic, helping consumers, keeping their interest in mind, acting with integrity. So we're hearing more and more financial regulators use the term conduct culture, right? So from FSRA perspective, when we think about conduct culture, we always think about it as a firm or an individual who always are thinking about their clients whenever they make a decision. So, from this perspective, obviously, it's a really important piece for us, because if you act with integrity, you generally lead to better consumers' outcome. So, Sadiq, maybe I'll turn to you since you're a principal broker. What do you think is the role of a brokerage and the principal broker when it comes to fostering a strong culture?
Yeah, fantastic question. And as you know, this is something that I personally, it means a lot to me because I believe in a strong conduct culture. And as a principal broker, as a brokerage, it's not just about making a conduct culture a best practice. It's about being the only practice. Protecting the customer also is smart business, because that's what it's the critical ingredient to having that customer retention, their repeat client. It's one of those things that brokerages and principal brokers that understand that and adopt that will be stronger in the years to come, because as the market change, as things get tougher, the repeat clientele, that repeat business, that customer retention is going to be a huge part of your success. And if you don't look after your customers, if you don't put their interests as the priority over all else, they are going to recognize it. Consumers are smarter and there's more access to information. They're going to realize that their best interest wasn't looked after, and they will look for the person who is going to do that. So it better be you, because it will be the other person instead.
That's great. Houston, anything to add from a regulator perspective?
We heard this morning about principles-based regulation. And Sadiq, from your comments, the principle is really to take care of the customer, give the customer the choice that they need, that they want to acquire that house, to stay in that home, to really, have the life that they want, right? And that's what that's what they're looking for. That's actually what regulators are looking for. And I think, to your point, if the brokerage has the right culture, that's what the brokerage is looking for. Ultimately, if it can be distilled down into what is important at the top of the brokerage, are they looking for volume? Are they looking for purely financial metrics? Or do they also have some measures in connection with, were we successful for our customer? Are the growth targets that we have compatible with putting customers in the right product? What kind of training and education and mentorship do we have in place so that the experience of the customer on the ground is consistent with what the principal broker wants and what presumably the principals of the organization are driving for? To that end, when FSRA thinks about how we can advance this forward, we think about things like mortgage suitability, and we think about principal broker oversight, how we can bring those two concepts into play so that we can strengthen the delivery of this service that's of critical importance to the customer.
Can I just jump in there for a sec?
Of course.
I think to understand the whole process will prove again that brokers are equipped to do this, because brokers are exactly that, brokering a deal. We look after the Canadian consumer in the process, but we also have to look after our lender partners. And there's a thing called efficiencies. So suitability drives efficiency. We not only want to make sure that the Canadian consumer is getting the right mortgage and the right product for that time in their life, but also we have to have a crystal ball and try and predict what's going to happen in 3 years for them, in 5 years for them, whether they know it or not. We're thinking that way. But we also have to think about our lender partners and making sure it's a suitable fit for the lender. Is that the client they're looking for? Is that a right product for the needs as well? So we are constantly worried about suitability in every single angle of the transaction. And our partners know it. And a good mortgage broker, like you said from the top, a good principal broker will be more worried about efficiencies and suitability than they will be about volume.
You can add a little bit to that. I don't want to repeat what you said. They're very valid points. When we talk about conduct, we're also always adding, as lenders in our alternative space, compliance and communication, because of the short-term nature of our mortgage loans. I mean, not only do you have to be, have good conduct, be transparent, make sure that they fully understand the product they're getting into. We have to consider any potential conflict of interest between borrowers and lenders if they're an individual private investor, for example. Very important. We certainly want to make sure that it's suitable, as was said before, but suitability can change so quickly. It was suitable 12 months ago. It's not necessarily suitable now from maybe an affordability perspective. So these things are on the fly, and that's where the communication part comes in as well. We've got to be really, really conscious: conduct, compliance, communication. And just because of maybe a form that you may be required if you're dealing with an individual private investor is part of your compliance, is part of the compliance also suitability? Yes, it is. Is it all these different things that may not be something that you're just filling out on a form that you should be doing anyway as part of your conversation, as part of choosing the right lender for your client, as part of educating and being a professional in the mortgage space.
Yeah, that is such a good point. And I think you'll see, as we move forward, as FSRA keep, doing our job and evolving, we want to focus on really what does it mean for consumers? It's a good business practice and not just fill out the form. I don't think that is going to be very helpful. But to Holly's point, what we are, striving to do is every time we put something in place, it got to be meaningful. It got to make a difference, as opposed to here's a paper, fill it out, and it may not achieve that purpose. And then we really want to try to get away from that. So talking about, the alternative space, private space, as you all know, we have recently introduced new two-tier licensing, and that became effective actually, it is becoming effective this coming April. Why we're implementing it, this is done in response to feedback that we've heard from the sector while the government was doing the review of our legislation last time around. Is intended to really introduce more competence and hence education to those individuals who are dealing in the private space. And private, it's a spectrum. We already heard that there are very sophisticated lender, but there's also, very unsophisticated private investors. But the goal of it is really about enhancing competency, ensuring folks can actually deliver the service that consumers want from them. So with this, maybe Holly, I'll turn it to you since you represent the lending space. What improvements in the private mortgage brokering practices do you anticipate seeing coming out of this new tiered licensing regime?
Well, a few things. I think education is always good, whether you're dealing with the private investor or mortgage investment entity of different kinds or mortgage investment corporation. For many years, of course, the mix and the MIEs in the alternative space, we do the risk assessments for our investors. We do all the work there, but having some education and being able to teach our mortgage professionals what to look for, how to assess suitability, risk, etc., I think is a good thing. It's going to take some time. I also think it kind of ups the level for Canadian consumers to be able to deal with mortgage brokers and agents. They have this other level of licensing. They're not just, disrespect to bank reps, where they're just not there selling a bank product. You're truly actually creating solutions, appropriate solutions based on the borrower's situation. And this second level of licensing, it kind of kicks it up a notch. If you really want to be working in that space, you're going to have to take these extra steps. You'll have to do the license. You'll have to, I'm sure a few years from now, there'll be, 2 years from now, there'll be some other continuing education. It's not a bad thing, and it raises the bar of professionalism for our industry. And as a lender, the fact that I'm dealing with brokers and agents from Ontario that have that extra level of expertise, that's great for us. And we'll have a higher expectation of how deals are sent in, how they're packaged, how they're presented. But I know that that's going to benefit our business and ultimately the consumer.
So
if I can,
yeah, sure.
if I can just kind of add on that, and that's like exactly what Hallie said there about education. I think it was mentioned earlier in one of the sessions that we got to embrace this as an industry, that more education is not a penalty; it is a benefit. Improving education improves the industry, and it speaks to that conduct culture that we just talked about. The more educated, the better we serve our clients. And that's what we get paid for. So, I think for the industry, we have to really understand that having more education is a positive thing and embrace it for that.
But you can add to that just a little tad on, is we're also dealing with our alternative lenders, the mix and MIEs, and the private investor. If you go out and call any E&O provider right now, where are the claims? Where are the problems? And they're with the individual investor. Well, I think this type of education will certainly differentiate again between that alternative lender, the true, this is our business we're in, and the individual investor, whether they are sophisticated or not. Because when trouble happens, it doesn't matter if you're sophisticated, you're in trouble. And that's where, we will see things hit the paper and we'll see problems happening. And we'll also see borrowers go, I didn't know that, whether they did or not. But this whole other level of licensing will say, yes, I've learned this. I know how to deal with this situation. And really be able to teach them how to deal with maybe that private investor that says, yes, I will renew in a year if we need to. Year goes by, market drops, values drop, rates go up. I want my money back. Now, what does the mortgage broker do? I think this will help them kind of go, what would the next steps be? How can we assist that client, maybe move on to another lender or get them out of this mortgage, as opposed to being foreclosed on or losing their home?
Right. So what advice you would give your brokers and agents when they're dealing in this space? Maybe Veronica, start with you.
Sure. Again, like Sadiq said, we don't shy away from education, especially at MPC. In fact, when this was launched, we so quickly launched a free course to the members. So sign up by this time. And that was to encourage everybody to just, take that on right away. The The transition that I've even seen in my time in the mortgage industry has been this. When I entered the space, people were A lenders or B lenders or private lenders, and neither would mix. I knew A brokers, that would pass to B brokers that would pass to A because they didn't know each other's space. Well, the stress test came along and it forced everybody to have to reinvent themselves and learn it all, because no longer did you have an A client coming to you only qualifying for A lenders. A clients now sometimes have to go into the private space just based on where everything has taken us. So everybody is excited for the education. I think the biggest challenge is going to be for Canadian consumers to understand what the heck is a level 1 and what the heck is a level 2. Because we do complicate things in our industry, and we're still wrapping our heads around the new terminology, the marketing around it as well. So there will be that. We hope that from our partners at FSRA, you'll do a good job of communicating to our clients this elevated level and what it means, because then we'll proudly wear that honor as well. As far as what, I'm telling brokers, embrace it, learn it, soak it all up. It's going to be good for your business. This is not the year to be stuck in, I only service clients in this realm, because you'll be turning away more people than you'll be servicing. And we want to be full service providers. And I highly mentioned it a couple of times. My keyword is communication. Over communicate with clients. Do everything you can to communicate. And one of the templates that I have that we're going to be sharing is a mortgage reasoning letter. Now, there are all kinds of consent forms. You talked about forms, but often it is an overwhelming process for the Canadian consumer to go through the mortgage process. And they're signing their life away, and sometimes they don't understand what they're signing. Brokers really want to take the time to do this, but this mortgage reasoning letter can take us into a 3-step process. So clients, you came to me with this scenario. This was your story. Now, here's the advice I gave you. But the 3rd paragraph will actually go through, here is the advice you took and the scenario you have asked me to place you in. And here is your homework in this scenario, because there is always homework. A good broker is always giving our consumers homework to do to transition them maybe to another product down the road. Now, the problem is Canadians don't always hear that, and they don't always do their homework. So they come back to us in the same scenario or a worse scenario, and then we have to figure out a solution for them again. So this mortgage reasoning letter takes them through the 3 stages, but the broker signs it and the consumer signs it. And that way there is full transparency and good communication in the whole process, and that extra explanation of understanding, especially in the world of privates, where there could be a penalty or there could be a fee or there could be something else associated that is out of the norm for them. Now they have full clarity on that. And I think that's going to be good for consumers as more and more brokers adopt this type of practice as well.
That's great advice. And I particularly like you put them in very simple terms. Homework. I think we all know what homeworks are, but when you start using other terminology, then you see a lot of glaze over. So that's great advice. Thank you for that. Sadiq, what about you?
Well, the advice as an association, I'm sure our fellow associations, CAMLA and MPC, feel the same way, is to brokers is know your lenders, know your products, know your client. That is the key thing to run a successful business. Without those things, you cannot give the advice. The typical sales process goes from receiving, understanding, helping, and then following up. What we need to do is spend more time in that understanding phase, because naturally, as people, as salespeople, as professionals, we go from the receiving to the helping and really gloss over the understanding. What we have to do is reset our mindset and spend more time in the understanding phase. Understand our lenders, understand our products, understand our clients, and we will be able to find the most suitable product for their needs. And very critical, absolutely critical, especially when dealing with the alternative and private space, is identify an exit strategy to move them into more preferable lending options.
But you can add to that. So we've got a new product, we're doing the homework, we've got them in something that's suitable. Now they're in it. And you know what hits the fan, right? Rates rise, values go down, the exit is no more. And this also happened a few years ago when the stress test came in, and now what you thought was going to be a good product for your client to get out, if they fix their credit, increase their income, whatever the issue was now no more. So the advice that I would give, and I'll just focus on, and this would, Kamala talks about this all the time. This is about when you're already in the mortgage. If you have clients in an alternative or like non-bank mortgage right now with an alternative lender, MIC, MIE, even if you're dealing with individual private investors, I would be going through that file immediately, communicating with your client. I'm not sure the exit is going to be what we talked about. If you're going to be able to renew with this lender, the rate may be higher. So you're setting expectations. So it's not all of a sudden this shock when they get, yes, you can renew, but it's going to be X rate. So really knowing the product of the day and the pricing of the day for the product that they're in, it changes very, very quickly. So I kind of have a checklist that we've been sending out to a lot of brokerages, just like open up the commitment. Where is the renewal fee? What does it cost? Are there any other fees attached to this? Is it a private investor that said they would renew? Market has changed. If it bleeds, it leads out there. So they're reading the newspapers, talking to their neighbors, and oh my gosh, they've got mortgage investments. The housing market is crashing. Maybe they won't renew anymore. What are your options for that client? So they're really focusing too, as a mortgage professional, on those that are already in the mortgage, and communicate, talk about a new exit, set expectations, and reasonable timelines for those are really important.
Sorry, Antoinette, one more thing I wanted to share is the trend that we're already seeing this year. Mm-hmm. And the trend is that the media, to Hallie's point on media, are freaking everybody out. And so Canadians are doing themselves no service by immediately calling their lender and just automatically renewing without seeking advice. This is a trend that started in December and has full-fledged gone through this month. So regardless of lender and what type, the lenders are shocked at how their retention teams, who used to take 1 to 3 months to try and renew a client and offer them amazing rates and negotiate, now are just receiving phone calls where they're saying, lock me in, I don't care on rate, because they're so freaked out by the media. The media is not servicing Canadians right now. The greatest thing is, even in this environment, they have so many options, and brokers are the ones they need to go to for that advice. So the advice to brokers is call your customers fast, because they might do themselves in by calling and just locking into something that doesn't service them properly. And to the Canadian consumers who are listening, if you're a mortgage holder, call your broker and ask for advice. See what is suitable to you right now, what might work for you in 6 months, what might work for you in the next year, but have a plan and don't just blindly lock in because the media is freaking you out. You might be doing yourself a worse favor than you would have if you called a broker and got proper advice.
Great, great advice here. So what I'm hearing is communicate, ask questions. Don't just make a decision very quickly, really think through what does it mean. So we're almost coming to the end of our panel, but a couple more questions. Wanted to get your perspective, since Veronica, you talk about the challenging situation. So broadly speaking, how do you think the sector is performing in the last few years?
Well, fantastic. When things get tough, which they have been in the past few years, market share in the broker community goes up. And what I mean is more people are gravitating their mortgages away from just walking into their traditional bank branch, and they're seeking out the advice of mortgage professionals. And we've seen these in the stats. Generally over speaking, they've gone up, but first-time home buyers traditionally only consult with a mortgage broker. The younger, the 18 to 36 market, are calling their mortgage broker. There is more of a value in having that expert advice because it has gotten so complicated. And so I think like they trust their accountant, they trust their financial advisor. Canadians are now trusting mortgage brokers more than ever. So this sector's been doing really well. I mean, March 2020, I wondered if I would have a job. And a month later, I wondered if I'd ever get a break again. So our world drastically changed over the past 2 years. Now it's drastically changing again on the other side. But this industry seems to rise to the occasion every time we're faced with something like that. And Canadians can be rest assured that we are equipped and ready to support their needs.
That's great. What about from the regulator perspective, Houston? Any observations?
Well, I think, Veronica, you mentioned that there is a greater reliance than ever, and the data proves that out. So I'm going back to 21 data, but the number of mortgages that were brokered went up a little bit, 1.5%, but the value of those mortgages went up by over 12%. So more people are finding loans through the brokerage channel, but also borrowing quite a bit more. And We also saw a significant increase in terms of the number of new mortgage agents being licensed and applying to, to get their license so that they can be a professional in the sector. And year over year, over 3 years, the new licensed mortgage agents went up by 24%. So that's what we're seeing. This presents a bit of an issue because you may end up with a problem with rising indebtedness and now rising rates. You have a level of experience out there that may not necessarily match. Now, we do have, of course, the two-tier licensing that is being introduced this year. And that's exactly why we need it, because we need the capacity, the proficiency, and the experience of the mortgage agents to match the need. And the second thing that we're working on, we announced through MBRCC, the National Coalition for National Mortgage Brokers Regulators Council of Canada, that we would be working on a mortgage suitability project that will ensure that people get the mortgages that they need.
Can I give you some good news
Yes.
to rest your worries? The biggest transition I've seen is actually bank professionals coming into the broker space. So they're not inexperienced. They do know mortgages and they know consumer debt load. And so the greatest thing is they just want to provide more options to Canadians. And they were limited in their previous spaces where they couldn't provide as many options. So they're seeking out this world so that they can truly advise the customer with all the options possible. So yes, we've seen a huge transition of people coming from other sectors as well, but that's where I've seen the biggest influx. And the greatest thing is it's experienced people coming in. Now they just have to learn more product and more lender opportunities, but they're so excited to do so because they're eager to service Canadians with tons of options.
That's good news for the customer.
Where I think in 2021, those numbers were a little inflated because in the height of the pandemic, a lot of people were working from home, found that they had a little bit more flexibility in their schedule and decided to become part of that gig economy and thought, wrongfully so, that mortgage brokering is part of that gig economy. I think we'll see some of those numbers being weeded out because they realize that this is a full-time investment in yourself, in your education, in your clients, and it's not something you do on the side while doing your other stuff.
That's a great point. So maybe just one final closing questions for the panel. I know we're getting close and we want to leave some time for questions. One prediction from each of you. Maybe I'll start with Holly. We'll go from
That's
that
pretty
side.
easy. Expect the unexpected. We are going to see more rate changes. We'll see a regulatory environment. OSFI, we're going to see a bunch of those types of changes, product changes, no matter what lender you're dealing with, whether it's the product itself or the location that they're lending in. But there's great opportunity. So that is expect the unexpected, be ready for the awesome opportunities that are coming with it.
I think I'll go along with the kind of same theme there. I was going to say change will happen. It's more of a prophecy than a prediction, I guess. But regardless of what that change looks like, the mortgage industry will be there to support consumers, and the industry as a whole will be stronger. And that's my prediction.
I'd say the customer is going to need the mortgage broker and the mortgage agent more than ever in an era of uncertainty, rising rates, affordability, and confusion around what the rules are. So we certainly hope and want to work with brokers, agents, brokerages, and suppliers of capital to make sure that consumers can get the access to the loans that they need.
Mine I've kind of covered. Market share will go up. More and more Canadians are going to rely on our services because they need options. And we've already seen that in some of the numbers. As I mentioned, 36% of 18 to 36-year-olds are coming to the mortgage space to get their mortgage advice and to work with their mortgages. So the younger consumers definitely already see the value. MPC membership went up drastically over the past couple of years. Mortgage agents are understanding that they need to rise to the occasion, take the extra education, lean on their associations for that education, and strive to be members in a professional association like Mortgage Professionals Canada. So our membership is now 9,500 strong in Ontario, and we're 15,350 nationwide. So you can rest assured that these people are engaged in the continuing education all the time, but this is the place to come for your mortgage because you need that advice right now. Do not just lock in and renew your mortgage right now. Lean on mortgage agents. They have all the options for you.
That's great. Well, thank you for all those insights and comments. We now have probably, I think, maybe 5 minutes for questions. Any questions
over in
from
the
the
front.
One over
audience?
here.
Ed?
Maybe I will repeat the question. So the question is whether we feel that conduct oversight is sufficient and whether that needs to will change in the next little while. Did I get that question? Right, and whether that views is shared by regulators and the sector, or if there are different views. So
I think that some of our lender partners are helping us along with this right now, because lender partners, I've seen the biggest trend over the past 2 years of lender partners now saying, we don't want to work with all of you. We want to work with the best of you. So they are self-correcting the industry and making sure that people rise to the occasion to have the professionalism they need to be good partners to the lenders and therefore have all the options they need for their clients. So a shout out to all of the lender partners in the industry because they're helping to correct this. I also think the broker owners are stepping up because, again, directed by the lenders, efficiencies matter more than ever now. So all of that behavior is correcting and making sure that mortgage agents are as professional as possible and as equipped as possible to offer great suitability to their clients. But a shout out to the lenders because they're directing some of that behavior and influencing it, whether it was, intentional or not, it's happening.
Broker owners are also, from a lender's perspective, they're telling us you can only deal with certain alternative lenders, or you can't deal with an individual private investor. So they're actually setting some of those rules that were not necessarily in place 4 or 5, 6 years ago, but I know this lender, I know what they do. This is the only ones that you can deal with. We're seeing a lot more of that.
I think on the principal broker end, which is a lot of the oversight falls on the shoulders of the principal broker. I think that it is great. I think what we have in place is a fantastic way of having that oversight in place. Obviously, every principal broker runs their brokerage a little bit differently, but the principal broker at the end of the day is accountable for their team, and there is that onus of due diligence and supervision placed on that principal broker. It's something that I think is important because, as Hallie said, setting those expectations of vetting which lenders are good lenders to work with, guiding their team, imparting their knowledge. That's all part of that supervision and that oversight process. Where I do think there is room for improvement is having a little bit more uniformity in those practices across brokerages, and also better reporting structure for the cases where there are individuals who aren't playing by the rules that they should be playing, and that can be disseminated so that the right parties that need to know that information have access to that information in a timely manner.
So maybe I can share the regulator perspective. So I've been with FISRA for a little over 3 years. So I've seen 3 years of this. So the big thing that I've noticed is definitely more dialogue between regulator and the sector. So what that suggests to me is the sector are more mindful, they're interested, they want to do the right thing. So do we need more conduct regulation? From my perspective, I think we are, we have a good foundation that we have dialogue. Nobody is perfect. So there are areas where we think we can work closer with the industry just to give more guidance so that we are traveling this journey together. I think that would be my perspective.
And I'd also just to add a little more detail to what Antoinette just mentioned. In addition to the two-tier licensing and the mortgage suitability, we have had principal broker examinations where our staff go out and they speak to principal brokers and they say, what have you done to ensure that the agents out there who are actually connecting with customers are fulfilling their obligations? And so I think our supervision we'll work together with mortgage suitability guidance, as well as the two-tier licensing to continue to make sure that there is adequate protection for the consumers out there who are entering into the largest debt obligation of their life.
Go ahead.
I have two comments and a couple of questions. So one, I just want to commend the regulator on the two-tier licensing system. I'm a big believer in that. It's really great. I actually think it should follow all the way through to basic licensing as well. I, for one, don't love the term mortgage agent. I feel like we should badge with that title.
Special agent.
Yeah, whereas I really love like mortgage broker, mortgage broker, or senior mortgage broker, or associate mortgage broker, so that the customer and the consumer really have a great understanding of the role in the process. This agent doesn't help the role in the process. But I really think it should be maybe even a three-tier system. And I think the current proposed with the upcoming licensing changes is really great groundwork to just change the whole licensing process. So that if somebody does come into the industry, they have 1 year where they can only deal with institutional lenders, another year where they can maybe broaden their scope and then move into a full. So I really commend regulation on that. Right. My question is, and my comment for that actually is, I think the regulator, the current regulator has done a really great job at market conduct enforcement, and I think that's really great, and supervision as well. My question is, what can we do more to collaborate as an industry? Like a lot of the terms that you say is supervision and consumer protection, but I really look forward to the opportunity to really collaborate with the regulator, because we don't have a direct conduit to the regulator. And I'll give you a great example. Like, we need the regulator to understand the inner workings of what we actually do. So the biggest risk and opportunity in our business, I think, right now, is working with the individual investor. We know that, right? Like how you and I talked about that. So in a financial planning role or health and benefits role, there's a client suitability form that's reviewed by the regulator. There's most importantly an investor. You're an investor, and I think we had those things. We were able to collaborate on like what truly are our challenges right now. That would be extremely helpful. My experience most recently, I called into market conduct and said, as a brokerage, we're looking at getting our mortgage administrator's license. We've identified that the biggest risk in our business right now is with individual investors. And if something goes wrong, heaven forbid, then First National, for example, as the lender, is big enough and strong enough to withstand that risk, and the individual lender is not. So then we get that involved. So we said, well, what if we become a mortgage administrator so we can help control that environment? But calling into market conduct, for example, we said, can you help explain that role a little bit to us? And more specifically, if you're my investor and I'm the administrator, who's registered to title? And nobody can answer that question. So I think there's some increased collaboration that needs to happen, not from a supervision perspective and not from an enforcement perspective, because I actually think the regulators are doing a great job of that. I think they have a really good understanding of the act and the enforcement of the act, but I think there needs to be further collaboration to what we actually do outside of institutional lending and outside of the act to say, how can we understand each other's business? Because if we don't know the goal, we'll start.
I'm going to try and summarize. The comment from the audience is about how regulators and sector can work closer together to really understand the business, not just the conduct. So, how can we collaborate better? I can certainly share my perspective, but maybe I'll turn to the panel and see.
Maybe I'll jump in because I agree with you wholeheartedly. And I have also seen such a change in the associations working with the regulator, and that is your voice. And so by having membership in Mortgage Professionals Canada or SIMBA, you are already having a voice. I encourage you to get as involved as possible with your associations, because that's where you share your voice that comes to the regulator. I won't speak to the regulators, phone calling in or anything like that, but I'm glad that you are celebrating the levels as well. I think that is the resounding message I've heard from the industry, is that we are fully supportive of increased levels and increased professionalism in our industry. We're not scared of it. It's actually very welcomed. And, I also wanted to add that we have been doing that as far as an association as well through AMPC. So as an extension, Nick, you mentioned like doing new agent training. We're running new agent training for line of sight of the fact that people do enter the industry and need that extra support. But we also have the AMPC and the PMPC, which is designations designed for mortgage agents to take their business to the next level and have better line of sight of all of those regulatory issues, morals and ethics, construction financing, commercial, residential underwriting in the perspective of lenders. So there is so much else that I think our community can tap into as well. But this is a major goal of mine, and I know the MPC staff, our new CEO and President Lauren, to have a better dialogue. And we, thank you to Houston and to Antoinette, we've had that, and it's ongoing and will increase. And I think you'll see a big difference over this next year.
If I can think. I totally agree with everything you've said. I do believe actually there is a lot of dialogue. Where there's room improvement is to educate everyone that dialogue actually does happen. I'm proudly part of the technical advisory committee with FISRA. Been involved in a lot of that communication in addition to being president of CMBA and being privy to a lot of those conversations. And what I would say is part of it too, and as Veronica said, getting involved with your associations to be a conduit for you is a very critical part. I put it out there to all mortgage agents and brokers. If you got a concern, call me up. You can look up the CMBA Ontario website. You'll find my information. You can find me online. I'm not hiding anywhere. Call me up and share it with me. I've had many conversations, lengthy conversations with brokers and agents about their concerns. And some of that stuff is really great feedback that I can now bring up in our discussions on various topics. Some of those things, sometimes it's just an opportunity to learn more about brokers' businesses and share that with the regulator, or sometimes it's policy changes that the regulator is considering that they are looking for feedback on. And because of those conversations, I now have something to contribute in that conversation. So I think there is conduits there. Unfortunately, I think where the work can be done and proved better is educating you guys, the industry, that those conduits exist and having you leverage it a lot more.
It's great. Thank you. So completely agree that, as regulators, we can only be effective if we understand the business, understand the risk we're facing. So we will always welcome conversation. I think you can probably get our contact information somewhere. Happy to chat further. And as Sadiq and others have said, you're going to see us more having these dialogue. So I think I'm getting the cue that we will need to wrap up, but really happy for all of you to be attending. And for those of you, if you have additional questions, I'm sure you can still send in the questions and we will gather them up and we will respond to them. So thank you everyone, both here as well as virtually for attending this session. Have a good afternoon.